Hey folks, Siam here. Really quick one. I know there's a lot of pain at the moment with FTX and loads of other hedge funds and exchanges going bust or at least freezing withdrawals. But this video is why this is actually a good thing. Okay, so before you throw your prams out the toys out the pram, hear me out. This is something I've been saying to my realistic trader students for a long time now, that we will not get north of 100k Bitcoin and beyond until a certain sequence of things happen. And this is this sequence, okay? So just hear me out. All-time highs and beyond will only happen when institutional money floods in, okay? The previous two bull markets were retail driven. 2018 was the last retail driven market. From now on, it's all institutional. So when will institutional money come flooding in? Well, that will only happen when US based, SEC approved Bitcoin and also ETH or Ether ETFs are granted, okay? And that's spot. The key word there is spot ETFs. At the moment, there's only futures ETFs. So what this means is that if you're a big fund like Grayscale or BlackRock, and they both want to do this, by the way, and you want to set up a $10 billion Bitcoin ETF, spot ETF, you need to go out and buy $10 billion worth of Bitcoin to have that ETF. So this is the key thing that will enable institutional money to flood in, because they're not going to dick around with Coinbase or setting up a MetaMask wallet and the Trezors and stuff like that. They want to put it into a safe as houses custodial. So a big bank like JP Morgan, etc., storing up their crypto if they go the hardcore route, or just to buy an ETF like funds do all day long and every day. And what this also means is that once an ETF is approved, it means that the whole network of financial advisors will have their hands unreleased or untied from behind their back, and then they can start investing pension funds and people's 401ks and mutual funds or whatnot. Honestly, the ETFs open up everything. Well, when are ETFs going to be granted? Well, after heavy regulation. There's so much dry powder. There are hundreds of billions of dollars sat there on the sidelines at the moment waiting to get into crypto. Michael Saylor has really sparked that off. He had a big conference last year. He spoke to over 700 CEOs of big fat cat companies, but they are not allowed and they will not enter this space until there is heavy regulation or even light regulation. They just need to know what the freaking bowling lanes are. Like, what can I do, what can't I do, what's illegal, what's not illegal. And heavy regulation won't come in until, you guessed it, retail, celebrity and politician pain is caused by bad actors, which is what we've just had. We've had Luna going bust, UST going bust. Even Janet freaking Yellen was talking about that. That caused loads of other funds to go bust. The amount of crypto-based hedge funds that have gone bust this year has been phenomenal. And now finally we have the second biggest retail platform in the world going bust, with SBF, Sam Bankman-Fried, being the crypto savior, absolutely screwing everyone over. Him and Alameda Research, etc. So, and this is quite some compelling information going around that he's actually some sort of agent, and I can actually understand that. If I was the Federal Reserve / CIA, etc., and that wanted to get, your footprint or your foot in the door of the crypto world, yeah, it makes sense to just create some sort of scapegoat, get some young whiz kid MIT dropout, suddenly have some dodgy backstory on how he made several $billion from currency trading, etc., set up the world's biggest fund. That way or one of the world's biggest crypto exchanges. That way you can see the inflows and outflows. You see everything. You can see people trying to wash their crypto. You can see tumblers being set up. You can see all sorts of stuff. Then you have full optics, and all it costs is a few $1 billion. And then you can finally rug pull, cause huge amounts of pain. I mean, there are so many celebrities that are going bust right now. Tom Brady put, I think, his life fortune into FTX. Even Kevin O'Leary, who's the Shark Tank person. In the UK, he's like the Peter Jones of the UK. But the key thing here is, remember, crypto did nothing wrong. Crypto did nothing. all that happened was bad actors. So nothing got hacked, like Bitcoin code wasn't hacked, etc. All that's happening is big retail pain, or big pain caused by bad actors. That's causing what's actually forcing the Bitcoin miners' capitulation. I know, check my YouTube videos out, I called this a while back. So Bitcoin miners around the world are going to have to either go bust or just stop mining because they can't afford to. And it's going to perpetuate things. So we've got at least one more leg down. So yeah. And when we have a look at some tweets, I mean, Kevin got hurt with this, and you can see that he was like, yeah, I want regulation, blah, blah, blah. They're going to use this as the cover to protect everyone. But hey ho. So try and look things in a different perspective. Even if you lost money, this is literally the best thing that can happen to crypto. And I said a few weeks ago that we need regulation to hurry the frick up, because Gary Gensler keeps saying no to all these ETFs, etc. So this is a good thing. This is accelerating that inevitability. And yeah, we just got to wait until those spot ETFs come online, and then game on, baby. Hope this finds you well. Bye.